Mastercard stock, ticker symbol MA. Is this a dividend growth stock to buy now? Well, Mastercard is down only 12% year to date, which seems like a lot, but compared to the market average, in this case the S&P 500, it isn't. And on top of that, Mastercard is loved among the investors because of the growth in the stock price and because of the dividend growth rate. So, is this the perfect time to buy Mastercard stock? In this video I'm going to show real quickly what Mastercard does, a view at the historical returns, the fundamental analysis, dividends, their major competitors, and in the last part I'm giving you my price target to see if Mastercard is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Mastercard do? Mastercard is the second largest payment processor in the world, having processed close to 6 trillion in purchase transactions during 2021. Mastercard operates in over 200 countries and processes transactions in over 150 currencies. In their most recent quarterly report, we see that there was a 70% growth worldwide, and that the revenue is divided into two segments: credit, representing 47% of the total revenue worldwide, and debit and prepaid, representing 53% revenue worldwide. Based on geolocation, there was a 40% growth in the US and a 19% growth worldwide. US is representing 32% of the total revenue, and the rest of the world represents around 68% of the total revenue. In this sheet we see that there was a 4% CARF growth year over year, which is quite important for a company like Mastercard, of course. And now that we know a bit more about Mastercard, let's check the historical returns to see what happened in the most recent periods. I decided to include the S&P 500 as a benchmark for the market average. Visa, the market leader in the industry and of course the biggest competitor of Mastercard, and American Express. On the 5-year chart we see that Mastercard had a total return of 171%, which is quite a lot compared to the others. The S&P 500 had a total return of 75%. Visa is at 122% and AXP is at 80%. So all stocks did better than the S&P 500 on the 5-year chart. On the 1-year chart it's getting quite interesting since the S&P 500 did a better job than all other stocks in this list. On the 6-month chart we see that Mastercard is down 12% while the S&P 500 is down almost 16%. Visa is down only 6.5% and AXP is down the most with 18%. On the 1-month chart we see that Mastercard is down twice the amount of the S&P 500 and Visa. AXP is down 14%, which is the most of the stocks in this list. So with Mastercard stock being down a decent amount, does it mean it's a buy at current prices? Let's find out by checking the fundamentals of this stock. Mastercard is a 360 billion market cap company, which makes them one of the larger companies in the US. Revenue is at 19.9 billion in the 12 trading months. In this graph we see that the revenue went up quite nice and steady in the past decade, except for the pandemic period, but after that revenue went up again. Net income is at 9.49 billion, which gives us a 47.7% profit margin, which is significantly higher than the 5-year average. So margins are increasing, which is a great thing. And keep in mind that a 47% profit margin is really high for a company in general. PE ratio sits at 33, which means you pay a premium for Mastercard stock. And this is probably the problem with this stock. So far, all fundamentals look really good, but the valuation is really high. But let's continue with analyzing the other fundamentals. In the last part of this video I will show you my 3 price targets, so make sure to watch until the end. Return on assets is sitting at 19%, which is above the minimum of 10%, so this looks really good. It's the same story with the return on equity. Return on invested capital is really high at 36%, which is great, especially since it's higher than the 5-year average. So all these numbers look really good to me. Next up is the balance sheet. Mastercard has 7.3 billion in total cash, 9.8 billion in operating cash flow and 8.6 billion in leverage-free cash flow. For me it's very important that they have enough cash to pay down a big chunk of the total debt. Right now total debt is sitting at 14.6 billion, meaning they have enough cash to pay down at least 50% of their total debt. So this looks really good. And for me, it's also really important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, do acquisitions, pay dividends, research and development. In this graph, we see that free cash flow is going up pretty steady, so this comforts me a lot. And as I told a second ago, free cash flow is also used to buy back shares, which creates a lot of value to the investor, since this increases the EPS, which attracts a lot of new investors. And of course, with buying back shares, less total dividends are paid. In the past 5 years, Mastercard bought back roughly 10% of the shares outstanding, which is very nice. And next up are the dividends. Mastercard pays a dividend yield of 0.6%, which isn't the highest, to be honest. Annual payout is at $1.96 a share or 49 cents each quarter. Payout ratio is at only 19%, which is very low. I wouldn't mind seeing the payout ratio a bit higher to get a higher dividend yield. The 5-year growth rate is sitting at 70.5%, which is very high. Mastercard grew the dividends for 11 years in a row. So overall, it looks really good and healthy. They grew the dividends at a high growth rate and payout ratio is really low. But I would love to see a little bit higher dividend yield, to be honest. Next up are the fundamentals of Mastercard compared to the major competitors. In this case, Visa and American Express. Visa is the largest company based on the market cap. Both Mastercard and Visa have a high PE ratio, but Mastercard has the highest right now, meaning you pay a premium for both stocks. American Express has a really low PE ratio compared to Mastercard and Visa. Mastercard has the highest 5-year revenue compound annual growth rate and also the highest 3-year net income compound annual growth rate, so they are the winner here in this part. Visa has the highest margin sitting at 51%. But Mastercard is doing quite good at 47% profit margin. American Express is sitting at only 17%. Return on equity, return on assets and return on total capital are all the highest at Mastercard. Visa is at the second spot here. All companies seem to have more than enough cash to pay down a big chunk of the total debt, but Visa and AXP seem to have a better ratio than Mastercard. Last part is about the dividends. AXP has the highest dividend yield and the lowest payout ratio. The 5-year dividend compound annual growth rate is the highest at Visa, but Mastercard almost has the same ratio. Visa has the most consecutive years of dividend growth, but Mastercard is only 2 years behind. And now the last part of this video, the price targets. I'm using the Everything Money software to come up with 3 price targets based on a low, mid and high assumption. Right now Mastercard is at $323 a share, and based on my assumptions it doesn't look good. My low assumption is at $134 to $137, which is a big decline. My mid assumption is at $174 to $185 a share, which is also a big decline in stock price. My high assumption is at $226 to $247, which is still a big decline. So this means Mastercard is overvalued right now based on my assumptions. My final conclusion on the stock is that I really like the business of Mastercard. The fundamentals look really good and they are doing a great job as a company. Revenue is growing very steady and they have more than enough cash to pay down a big chunk of their total debt. Dividends are looking really healthy and on top of that they buy back a lot of shares. But there's one problem: valuation. I think I will just wait to see the stock to go down in the coming weeks, months or maybe even years, because right now they are overvalued big time in my opinion. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.